MPW has in fact released their earnings for quarter two of 2023. Now, this has been a little bit of a mixed bag, but if you had told me a few weeks ago that this would be the results, I would have actually assumed the share price would have gone up 15% rather than down. So, take for that what you will, but it's also possibly a factor that the market overall is just showing a lot of bleeding. There's a lot of red in my portfolio. Almost every holding I have seems to be at least a little bit down today. And it could just be people are looking for things to catastrophize and, reasons to sell. That being said, the MPW earnings release is, like I said, a little bit of a mixed bag, but I think the good outweighs the bad. But we'll start with the bad. All right, the very first line item is that there was a net loss of 7 cents per share. Now, the reason I think that, this could be the thing that has spooked a lot of people is there's been a lot of conversation around, is the dividend safe? Are they going to be okay? Can they keep paying this dividend? Is there going to be a dividend cut? You see it whenever, you could just do a search right now for MPW, YouTube videos and news articles, and, search MPW dividend. There's a lot out there. There's a lot of people speculating about the dividend. So it makes sense that if the first thing you see is there's a net loss, your initial instinct might be, oh no, the dividend, I'm worried about the dividend. But, REITs are a little different than other companies. So that's something to keep in mind. Now, this net loss did have to do with Steward Healthcare. Okay, Steward Healthcare was their biggest tenant. They, previously had all these financial problems, and it even slightly worried me because of how concentrated they were. Steward was their biggest tenant, has so many of their properties rented, and it's almost too many eggs in one basket in a sense for if you're MPW. So recently, they actually had an early termination for Steward on 5 hospitals in Utah, which, sort of spreads the risk around a little bit more, makes them a little less concentrated with Steward as a tenant. And, there were some losses related to that, including a $95 million rent write-off. Now, they've released those properties to Common Spirit. So those properties will, in the long run, still bring in money. It's just in the shuffle of shutting down Steward and then releasing, there were some losses in the middle. But the fact is, they were able to get another tenant in there, and I think that just goes to show that these properties are desirable and good properties, and, if they need to move a tenant out, they can re-rent these properties to somebody else if they need to. So for me, that's actually more of a positive sign than a negative one, because one of the criticisms I've received is, well, if something bad happens and one of these tenants can't pay, and how are they going to get somebody else to rent them? These properties are basically as desirable as malls, et cetera, et cetera. But the fact is, these are hospitals. These are, in many cases, essential healthcare infrastructure. Of course, if one medical group moves out, one will probably want to move in to fill that gap in the market. Healthcare groups, they like to make money. They're often businesses that want to make a profit. So if there's a gap in the market and there's customers, that need to be served, somebody is going to move in to serve those customers and turn a profit. So that is kind of what I view as like the bad part. That net loss, I think, is the thing that if I had to point at something that might have spooked investors, that's probably the thing. But the funds from operations tells a bit of a different story. So I want to just quickly point out that the dividend per share is 29 cents per share per quarter. Okay. Now, funds from operations. There's 3 different ways to do funds from operations. There's just regular old funds from operations. There's normalized funds from operations, and then there's adjusted funds from operations. Each one of them is calculated a little bit differently based on slightly different rules. Usually, people like to go more off of the normalized or adjusted funds from operations because it accounts for more variables and usually is will be a slightly more conservative number than top line funds from operations. But basically, funds from operations rather than net income is the thing you would generally look at, or funds from operations per share rather than earnings per share, because the GAAP accounting rules are a little bit weird when it comes to REITs because they're completely real estate based and they're just not really, they don't really produce a good or service the way another business like, say, Apple or something like that might. So given those numbers, top line funds from operations per share, 57 cents per share this Q2 2023 compared to comparable quarter last year of only 46 cents. Normalized funds from operations, 48 compared to 46. Adjusted funds from operations, 41 compared to 35. Okay? So this means the funds from operations, Q2 this year compared to Q2 last year, by all 3 methods of measurement, are actually up. Now, yes, there was a net loss per GAAP accounting rules, but REITs actually pay their dividend from their funds from operations. All of these numbers are higher than their comparable numbers from last year. Okay? All of them are higher than last year. And all of them are higher than 29 cents by a pretty wide margin. Okay? So if they're higher than 29 cents and they're higher than last year and the dividend's been at 29 cents for a while, I don't see a particularly compelling case for them to be cutting this dividend anytime soon. So if anything, I would imagine that alone would be pretty positive for the stock. Okay. Now they didn't specifically touch on the dividend in the earnings call from what I've read. I didn't actually call in and join the conference call this morning because I was asleep. But even still, if they didn't say that they were looking at cutting it and funds from operation seems to be easily covering it, I don't see why it would go away anytime soon. Obviously anything can happen, but I just don't see any reason for the panic as of right this moment. Funds from operation is looking, if anything, pretty darn healthy. And I think in the long run, things will probably catch up to the fundamentals on this. Now, the other thing I wanted to just briefly look at was the balance sheet. Now, the balance sheet has taken a little bit of a trim, but still, we've got a net asset value, shareholders' equity of $8.3 billion. So it's down a tiny bit compared to this time last year, but not by a super significant amount. And honestly, I think there's still a lot of value to be had here. And I'm definitely not getting rid of my shares over this earnings release. So let me know in the comments if you've got MPW in your portfolio. if this earnings release has shaken you at all, or if you think this might be a good opportunity to continue to add more to your position. Also, hop into my Discord, link is in the description, and hit the join button. Become a channel member, get in on the ground floor. Remember, the members will get special recognition, special priority on all comment replies, and of course have more say in the future direction of the channel. For now, I take my leave of you. Have a good one.